I think Ethereum-centric DeFi has, to a large extent, hit a wall. We have borrow lend, which works well on Compound and Aave. It's not by any means ideal, but it like works reasonably well. We have Uniswap and Sushi, which are, again, they work okay, but I would argue they're not great for trading. And that's kind of it. Like everything else that's been tried is mostly not working. The primary reason for that is, I think, like lack of scalability and too high of latency. You look at DYDX on Starkware, and it actually is a pretty wonderful product. The problem with DYDX is that like it's not extensible and doesn't plug into other things. It lives in its own little island. And like the kind of thing that made DeFi was that all of these things natively interoperated with each other. The beauty of DeFi was that you can mint DAI out of thin air, and then you can go trade on a Uniswap or put it in Compound. But in DYDX, it lives in its own bubble, and that's it. And if we can't get perpetual contracts, generally speaking, every marginal financial product gets more difficult. So options are more difficult than perpetuals for various reasons, kind of like gamma and some other things. You start getting into interest rate derivatives. Again, these things require more robust borrow lend markets. They require limit orders typically on those things. And you're just kind of, that entire ecosystem has kind of sort of hit a wall. Now it's possible that Arbitrum and Optimism alleviate that. I'm a little skeptical they will, but you never know. But I think kind of Ethereum DeFi is kind of struggling for those reasons.
Welcome to Mission DeFi with Brad Nickel, where we explore projects in decentralized finance that are innovating and driving our mission of financial freedom forward. Thank you for listening. If you like what you hear, please subscribe, rate, and review Mission DeFi and spread the word by posting a tweet to the show. All opinions expressed by Brad Nickel or his guests are their opinions and do not reflect the opinions of Black Knox, Material Indicators, or any other affiliated organizations. You should not treat any opinion expressed by Brad Nickel or his guests as an inducement to make a particular investment, follow a particular strategy, or become involved with any project. A project being featured on the show is not an endorsement of that project in any way. This podcast is for informational purposes only. Now, here's Mission DeFi with Brad Nickel.
I'm really excited today to have Kyle Samani from Multicoin Capital, which is a investment, a venture capital, hedge fund, kind of a combination of funds like we're seeing more and more in this space today, and probably one of the first ones that kind of bridged the gap between all of that. And Kyle, I want to start off by kind of getting a little bit of background about how you got into crypto, how you formed Multicoin Capital and why, and kind of what's the story behind creating this thing and what's your overall reaching goal with it.
Yeah, happy to touch on all that stuff, Brad. Hi, everyone. By the way, I'm Kyle, one of the co-founders and managing partners at Multicoin Capital. So quickly, my story. I was born and raised in Austin, Texas, and that is where I currently live today. I was very fortunate. My dad's a computer scientist, and I grew up with computers and started programming at a pretty young age.
Nice.
Went to NYU and studied finance. Thought I was too cool to be a programmer. And so I was like, yeah, I'm going to go to business school and like learn about finance. About a year and a half, 2 years into college, I realized I had no interest in working in investment banking and wanted to go be a programmer.
Nice.
After college, I ended up going down the tech startup route, came back to Austin and did my first tech startup. It was called Pristine in May of 2013. Pristine built software for Google Glass for surgeons. I know Google Glass was a very silly consumer product, but it was actually a very interesting tool for surgeons because surgeons are sterile. They have to work with their hands. And so we built software for kind of workflow automation tools for surgeons. Ended up raising about 5 million in venture, grew to almost 30 employees. And then Google killed Google Glass, which, as you might imagine, is a small problem for my business. Ended up pivoting the company after that. And the company was ultimately acquired in kind of a small little IP and engineering talent pickup. Anyways, in early 2016, I had to kind of find something new to do with my life. And at the time I was fiddling around with some of Stripe's APYs And even back in early 2016, Stripe was a pretty hyped up company. And I remember going through documentation, and I was like, this seems not impressive. All you can do is take a credit card payment. Like, this doesn't seem revolutionary to me. I was like, okay, well, whatever. And then I discovered Ethereum and I started fiddling around with Ethereum, and I realized that Ethereum was an infinitely extensible financial tool. And that's kind of when the light bulb went off and started kind of pulling me into crypto. Over the course of 2016, I started reading and learning more about the space, investing my own money and time, learning about the history of cryptography, distributed systems, monetary policy, areas of that I wasn't terribly familiar with before. And by the spring of 2017, I had kind of developed a full-time internet hobby. In May of 17, Tushar and I decided to launch Multicoin, and we launched our hedge fund on October 1st of 2017. We added our first venture fund in July of 18. We are currently deploying out of our second venture fund. And then we manage our hedge fund as well. Today, we manage a few billion in assets across those vehicles. We have 14 employees in the Austin area, Dallas area, New York area, and China. And yeah, we're having a ton of fun and investing in a whole bunch of cool crypto stuff.
Okay, so I want to unpack a little bit there, if you don't mind, real quick. So you went from I'm not going to be an investment banker, finance sucks. I want to go back to coding because I love tech, I love coding, and then you ended up back in finance, studying economics, monetary policy, and everything else related to crypto. And you had a nice exit, so you obviously had money to live on and go on and do all that. But you were essentially a college graduate who had done a successful startup and in the tech space, and then all of a sudden you're launching a hedge fund. Was that based on you guys were doing a lot of trading, or you were already kind of managing your own money and had some success investing? I mean, kind of how's that? That seems like a big leap, but it probably was a progressive thing that happened.
Yeah. So in early 17, Tushar and I were talking about crypto increasingly, just kind of for our own investing. And we both kind of realized we were both kind of getting obsessed with it. And, we started to seriously talk about, okay, well, what can we do? What should we do? Both of us had always had an inclination towards wanting to invest. Both of us were at that point just strictly operators, or had been operators. We talked about, hey, what are our strengths and what are our weaknesses as individuals? And both of us had, learned the basics of startup operations, recruiting, marketing, sales, fundraising, all these things. And both of us, you know, kind of agreed that our passion was not doing all of those things. Our passion was really thinking, thesis formation, writing, and working with on lots of kind of different intellectual ideas. And that just kind of naturally lends itself much more towards investing than towards operating. So we both came to that conclusion rather quickly. The other thing we had a theory about was that the crypto ecosystem was a very, very large intellectual design space, and that the market as a whole was learning together, and that we could have a unique position in helping kind of a lot of new thinking in the space through our writing. I remember as we were launching over the course of summer and into the fall of 17, we started writing blog posts, and our blog pretty quickly became known for being quite thoughtful. But I remember I was stunned that there were so few others doing what we were doing, because what we were doing was like not rocket science. Like it was like very obvious what we were doing.
Right.
Um,
Publishing how you were doing it.
yeah, yeah, literally. It was like we were doing like one a week. It was pretty clear, and so that we did that, and it turned out to have worked really well. Today, there's a much more robust community of people writing, both investors and operators. But really, back in 17, I mean, there were very few operators in the space writing things that were thoughtful, and there were basically no investors. Like to a shocking degree, there was almost no investors producing good content. And we happened to just get very lucky and capitalize on that quickly and use that to kind of grow into something bigger.
Well, and I think your strength was that you had a technical background, right? And so that gives you credibility immediately to people who are looking for making an investment in crypto. And then when you're publishing thesis around where you think the market's going, where you think the projects are going, that obviously helps you build and grow it much faster. So I think that makes a lot of sense.
Yeah, that certainly helped a fair bit in the early days for sure. Less so today, but definitely did back then.
Well, and you're still, I mean, look, you don't lack any opinions on tech, or you're still publishing pretty opinionated pieces on tech, on where the market's going, those kinds of things. So I think it still plays I mean, from my perspective, look outside in, looking at what you write, what you publish, and what you tweet about, you definitely have strong opinions about tech and where it's going and where the ecosystem needs to go. Um, so let you have that much money under management, but you only have 14 people, right? And I would assume that most other firms that size, and I'm not living in that world, but would not have 14 people. Is that primarily because you didn't want to be, like you said, doing all the operations and management of a massive organization? So you really have kept it tight. I mean, how hard is it to keep that when you're running a hedge fund and managing two venture funds that small, really?
Yeah, so I mean, it's a function of strategy primarily. Our strategy is quite clear, which is we make concentrated bets in things that we have high conviction in, and that lends itself towards having a small team and everyone works really hard. And like Multicoin is not an easy place to work, both in terms of intellectual demand and time rigor and work ethic required. But everyone loves what they do and has we all have the good fortune of working on cool stuff. Yeah, I joke with people that I make one or two decisions per year that matter, and we make 10 that kind of matter, and basically all the other decisions I make throughout the year to a large degree don't matter.
That's interesting.
Um, and if you believe that is true, then you don't need a huge team
Yeah.
to deal with that. Now, that is naturally a higher risk type of way to run a firm than to make 100 bets that matter equally, and there's not one that matters that tear up one more, substantially more than the others. But we just like concentration and focus, and that lends itself to a small team as opposed to a big one.
Well, and that requires faith in your kind of analysis and assessment of what you're investing in, right? So, I mean, looking at your portfolio, it's obvious to me that I would say, 60, 70% at least are already kind of known brands in the community. You've made bets on things that actually have turned out to be really critical across the board to the ecosystem or are growing rapidly. So Solana, Near, those kinds of things. So I think it obviously pays off, but I can definitely see how the risk is greater there. On the hedge fund side of things, is this really kind of are you betting on kind of a portfolio strategy? How you guys manage that? Are you investing kind of portfolio basis or what are people investing in when they invest in your hedge fund?
Yeah, so our hedge fund is I'd say probably not like most hedge funds. The word hedge fund is a very thrown around term, and at this point means almost nothing. The original definition of hedge fund was a fund that was naturally hedged. They had longs and shorts offsetting each other, and that was kind of the idea. Today, there's plenty of long only hedge funds, which it kind of defeats the purpose. There's also so many styles of hedge funds now. There's people who trade high frequency. There's people who trade every day. There's people who trade every week. There's people who trade every month or year, and they're all just kind of called hedge funds. So it's a almost useless term. Our hedge fund is probably the simplest way to think about it is as a liquid venture fund. That does not have a strict academic definition, but it means approximately what you think it means,
Right.
which is that we have core positions that we hold that we really like. We intend to hold those positions indefinitely. We obviously reassess, them on a quarterly basis and make sure things are generally going according to plan or not. And obviously help those teams succeed to the best of our ability. But we don't trade much. We don't fiddle with the portfolio too much. We like to say that the hedge fund is actively managed, not actively traded. So when people invest in our hedge fund, they're getting exposure to that kind of set of ideas. In our venture fund, our venture funds are very typical in terms of how venture funds are structured, in terms of overall fund composition, concentration, and those kinds of things.
Okay. And so in terms of the venture fund, are these usually mixed deals like tokens and equity together, or is that typically how you're going into a lot of these? I mean, I'm assuming some projects there is no equity to take, but in the case where there is, are you taking a mix in the venture fund?
So every existing company is different. Some of them don't have any equity at all. Some of them have equity and tokens. Some of them have only one. There's a lot out there. There's not a single one size fits all
Yeah.
thing, or just a single one size fits all template for the market. We are token focused investors, and I would say the substantial majority of what we invest in is token oriented. But we do invest in some instances in equity, but we prefer to invest in tokens generally.
Okay, great. Let's get into kind of DeFi in general, if you don't mind a little bit. You call it the killer app of crypto. I was just listening to you on Colossus earlier today and found that pretty interesting, the kind of your approach there. But Right now, I mean, obviously DeFi is driving everything in crypto. You know, a couple of years ago, you could look at the DApp indexes and see absolutely no activity happening at all. And a lot of that's driven by AMMs. Do you think that what we're currently experiencing in DeFi, the way things are being driven, is sustainable? Are we able to kind of keep growing the way we are with the kinds of projects we're putting out there, or do you really see that in the projects you're talking to that there's a lot of change happening instead of kind of like this endless token distribution model and yield farming and liquidity pool? What I'm getting at is, I personally, I'm trying not to put my own opinion in here, but I personally think that you know AMMs have kickstarted what we have in the DeFi space and driven a lot of what's happening. But I'm questioning whether that is still sustainable. And I'm seeing more and more projects like Olympus DAO that is relying on bonds and other projects that are focused more on stability around their tokens and less on kind of yield farming and 1500% APYs. Are you seeing in the space as well, in the companies you're in the projects you're talking to, that there's a change happening in the DeFi space and that we're becoming more fundamental based and that we're going to start seeing that change happening across the board in the DeFi space?
Excuse me. Yeah. So I do think that the market's evolving. A general truism with crypto is that whenever there's a new way to a new mechanism for capital formation, you typically have a bubble, and then that bubble fades, and new kind of shinier objects come around. So the first one of those was mining for Bitcoin, and then in the 2011 to 2014 era, there was like a lot of Bitcoin forks and mining and whatever, but they were all mostly garbage. And then the second kind of major form of capital formation was ICOs, and then the third was liquidity mining. And then the fourth probably was these profile pictures, and then the fifth probably is like the generative artworks. Um, and like we may see some other interesting things kind of emerging here over the next weeks and months around social tokens and creator monetization and some other things. But the market is evolving for sure. And as it evolves, the old things, feel older, and then there's less attention paid to them and such. And then, we continue to kind of innovate and get closer towards the modern incarnation of financial markets. But it is natural that we're not going to maintain new farms popping up at 800% APYs. Like that's not going to sustain. And that's fine and well. Actually, that's probably good and healthy that behavior is mostly gone.
So what are you kind of seeing? I mean, kind of beyond profile pictures and generative art, what are you guys kind of seeing as coming in the future or in the near future in the DeFi space?
Yeah, I think Ethereum centric DeFi has to a large extent hit a wall. Everyone, like, we have borrow lend, which works well on Compound and Aave. It's not by any means ideal, but it like works reasonably well. We have Uniswap and Sushi, which are, again, they work okay, but I would argue they're not great for trading. And that's kind of it. Like everything else that's been tried is mostly not working. The primary reason for that is, I think, like lack of scalability and too high of latency. You look at DYDX on Starkware, and it actually is a pretty wonderful product. The problem with DYDX is that like it's not extensible and doesn't plug into other things. It lives in its own little island. And like the kind of thing that made DeFi was that all of these things natively interoperated with each other. The beauty of DeFi was that you can mint DAI out of thin air, and then you can go trade on a Uniswap or put it in Compound. But in DYDX, it lives in its own bubble, and that's it. And if we can't get perpetual contracts, generally speaking, every marginal financial product gets more difficult. So options are more difficult than perpetuals for various reasons, kind of like gamma and some other things. You start getting into interest rate derivatives. Again, these things require more robust borrow lend markets. They require limit orders typically on those things. And you're just kind of, that entire ecosystem is kind of sort of hit a wall. Now it's possible that Arbitrum and Optimism alleviate that. I'm a little skeptical they will, but you never know. But I think kind of Ethereum DeFi is kind of struggling for those reasons. I think if you look at kind of Solana DeFi, that's kind of where I think you're going to see the intellectual center of DeFi move pretty quickly. Like in the next 3 months or so, I think that will be common ground. Because if you look at, for example, today, I think Mango is the most instructive example. They have spot trading, they have borrow margin trading, borrow lend, and they have perpetuals. All of it works together, all of it cross margins together, and it's all composable externally. And you can take any tokenized position in Mango and use it in any other system on Solana. And like already today that would make Mango the single most sophisticated DeFi product in the world. And the market is not fully kind of appreciating this, and then adjusted for Solana's age and for Mango's age relative to all the stuff on Ethereum. Like that's a pretty stunning statement. And so I think you're going to see a lot more of that stuff just kind of happen elsewhere. What does that mean for liquidity mining and other things? I'm less clear, but if you want to get to increasingly sophisticated derivatives, you just need to have a system that's kind of designed for it.
So, how, in terms of Solana, obviously you see Solana as a really critical thing, and it's based on obviously transaction speed and fees and being able to execute and do the things you were just talking about, and making it a much and it's a much better user experience. In terms of developer recruitment, is Solana really kind of seeing an uptake in the amount of developers coming on board that are actually creating apps? And are they kind of getting to where they want to be, do you think?
So the one word answer is yes. The more nuanced answer is the, the measuring developer uptake and mindshare is difficult, but not impossible. So the ways you can try and quantify it are looking at things like number of times repos are starred or forked and those kinds of things. If you look at Metaplex, for example, which is kind of Solana's primary NFT library, it's been forked like 3,000 times in the last month.
Wow.
So I mean that's like a very obvious kind of in your face statement. If you look at Serum, I forget the numbers there, but not that large, but like a lot of people are hacking away on Serum. The I think the most useful way to try and judge that is by talking to the entrepreneurs. Unfortunately, that's not scalable, and like you can't have 10,000 people all over the world talking to all of the entrepreneurs. That just doesn't work. Sure, at the time. So we're very fortunate in our position as a Solana centric VC that we get to talk to more or less all of them. But we can see the quality of the intellectual capital in the space, and we can see the number of them as well. And I can tell you that like there's about to be an absolute tidal wave. Amazing things.
That's amazing. And in terms of, I mean, I think growth and volume is growing. You're seeing more and more users moving over to Solana and giving it a shot. Do you think it just becomes a factor of the apps that will attract the users over and the investors over, and then get to experience kind of the speed and capabilities of it, and then they'll stay and they'll be locked in? Do you feel like you have enough of kind of the great products on the chain now that people will come in and start spending more of their time from an investment perspective in Solana than they are currently on Ethereum, Polygon, whatever?
Mission DeFi is sponsored by Material Indicators. Material Indicators brings science to investing and helps investors make more informed and smarter trading decisions. Their powerful community of thousands of experienced investors is free to join and is available to anyone that wants to learn more about trading crypto successfully. Visit their website at materialindicators.com. That's materialindicators.com. Or join their community on Telegram by searching for Material Indicators.
I mean, I don't really think I have to make any forward-facing projections. You can just look at the data. The most instructive data on this specifically is number of weekly users of Phantom. Phantom is kind of the MetaMask equivalent for Solana. They just announced 500,000 weekly active users, and that's up from 0 90 days ago, or like maybe 120 days ago.
That's amazing.
So like yeah, like it absolutely is happening.
That's great. That's great to hear. What was this when you got involved with Solana? Was it a factor of, hey, I see this tech, it's amazing, and this is why I want to be a part of it? Or was it also a factor of the founder and why they were creating, or was it a mix of everything? How early kind of were you in Solana and you really felt like this was a play you wanted to make and go after?
Yeah, I mean, it's a combination of everything. It can't just be tech, because the more sophisticated the tech, the more the founder's background matters on, do they have the requisite skills to build the thing that they claim they want to build, and that kind of a thing. So it's definitely all of the above. We got involved in Solana from the very early stages. We were invested in the very first round. We led the subsequent rounds. We have been involved closely with the team for many years, and yeah, like have become are about as familiar with Solana as you can get.
So let's talk a little bit about some of the other investments. You guys are also you have Near in the portfolio. Is that a project you're actively engaged with? I've had a number of conversations with those guys. I think they're doing some impressive stuff, seem to be having a focus lately on the NFT space. What are you thinking about Near these days?
Yeah, so we did invest early in Near. We're not as active with Near as we are with Solana, but those guys are super smart and capable. The challenge with launching a new blockchain, it's kind of achieving critical mass and getting, you know, you need a critical mass of exchange on ramps, liquidity, wallets, developer tooling, apps, tokens to trade and use, dev tooling. In order to make one of these, you kind of need all of that stuff to work at some sufficiently good scale. It's not clear that Near is quite at that point yet, but I know they're working on all of it. And yeah, I know they have had some interesting kind of DAO things that are growing nicely. I do believe they have some compelling NFT projects there as well. So I know they're kind of iterating on all that stuff, but it's just a super hard undertaking.
Yeah, no, I definitely feel like it's really difficult. I mean, I think they had, kind of UI, UX focus at the beginning, and that's really worked well. But overcoming kind of the network effects of everybody else is difficult. I just interviewed folks at Superfluid, and I'm pretty fascinated by this. My background has been a lot in kind of the developer focused platforms, and I think there's a lot of potential in that. Can you kind of talk to us a little bit about why you invested in Superfluid and what you think about it?
Yeah. So we invested in Superfluid last round, is probably 3 or 4 months ago. Our kind of motivation was that we generally like investing in primitives, either technical primitives or financial primitives, and Superfluid is a pretty interesting tech/finance primitive. Blockchains make it really easy to send money from point A to point B, or to trade tokens or do interest rates or whatever. And you have these nice kind of guarantees. It's auditable, instant settlements, transparent, all these things. But at the end of the day, every single transaction is still a discrete transaction. If you look at Uniswap, arguably the most interesting thing about Uniswap is that you don't have a notion of a discrete order book. You just have liquidity ranges basically along the XY equals K curve. And it struck us as we looked at Superfluid, I kind of saw some parallels to Uniswap, and I was like, the idea of this is that you can just stream money between places, and you can even recompose multiple streams over each other concurrently. And that struck us as like kind of a first order breakthrough in like how you can design value flow through an economy. And it just seemed like very important and a very big idea. And so that's why we invested. On top of that, I mean, the team, Francesco and the rest of the team there have been awesome guys to work with, and we really are fans of what they do. But the core idea of what they're doing is we think a real breakthrough.
Yeah, I definitely think it is, and I think that's one of those projects where we have no idea kind of how much is going to be potentially created on that primitive, right? I mean, I think that the potential to utilize this system is incredible. Obviously, it's going to start with solving like one of the big problems in crypto right away in terms of payments and subscriptions. That's an easy no brainer. I see that as something that will actually could drive a lot of adoption. But I think that there's just so many possibilities with that platform, and I was really impressed with Francesco in the interview. I was pretty amazed at what their approach and how they built this thing and gone to market with it. One of the things you guys talk about in your thesis is the number one thing that drives kind of a lot of your investment thesis overall is the consumers humans have a real lack of trust in organizations and bureaucracies and governments, and it's growing rapidly. And obviously that drives for you kind of the thesis around crypto and everything you're doing. Do you think that do you think we're doing a good enough job as a community, as an ecosystem, whatever the hell you want to call it, of communicating to the rest of the planet that this is the place where you don't have to trust? I'm not sure we have yet, and I'm not even sure if we have necessarily the answers to that, but do you think there are ways that we can start doing that better? And do you think we're doing it well enough?
Rendering judgment on such a broad thing is very difficult, and I don't think I'm really qualified to do that. So I'm going to say mostly no opinion. Yeah, it's a hard question to reason about, and I'm not sure I have enough knowledge to have a good answer.
Okay. Well, I guess the question then is do you start seeing some of the platforms in DeFi starting to get integrated into real life, right? Are there ways that we can start integrating what we have into the worlds of people that aren't into crypto yet or aren't into DeFi that can start exposing people to it without them necessarily thinking of it as crypto? So for example, if you look like a platform like Alchemix and their lending model, right? Is that something that goes into the mortgage market, the car market, whatever? Are there projects, or the things you think we can be doing from a project perspective that can be integrated into real life and start driving adoption?
Yeah. So if you look at DeFi today, DeFi is sort of the world's largest casino, and I think that's a compliment. Not if the bear case for DeFi is that it is the world's largest casino, like then that means DeFi is very undervalued.
It's great.
But then there's the bull case is maybe something more than that. a lot of people like yourselves and others have been asking the question, how do we take these ideas that are obviously important, kind of like it's obvious DeFi is the right way to do finance, but there's just so much inertia and so much regulatory capture in the financial system. How do you bring DeFi into real world stuff? The answer to that is not obvious. I think the answer is you have to have DeFi kind of slowly creep into other things organically. And so, for example, today DeFi and NFTs still by and large are separate, but you're seeing people play with oracles like NFT or price oracles. You're seeing people with NFT fractionalization, where you can then trade the fractions on something like Uniswap. You're going to see a lot more people launching social tokens and NFTs around tied to social tokens. And I think as that whole complex takes off, that will kind of introduce DeFi to mainstream audiences. They won't know they're using DeFi, but at least it will introduce the usage of DeFi to people beyond people who are in the world's largest casino. And I think that's probably how you kind of unlock things from there. I think of this, by the way, similarly to like, how did we get PCs is out there in the world? And the first buyers of PCs beyond nerds who thought it was cool were enterprise buyers who said, hey, we have all these typewriters and these typewriters are dumb because if you make a mistake, you have to throw away the piece of paper. We can make our teams more efficient with Excel and with Microsoft and with Word. And then, those people learn how to use a computer. And then some of them wanted to use it at home, right? So they buy another one for home. And you kind of have these similar types of crossover things happen. I expect some similar sets of things to happen over the next, 3 to 5 years.
Cool. Yeah, and I definitely think that NFTs, gaming connections, and I like the idea of social tokens as well. I don't know how well those will take off or not, but I definitely think those are things that could drive people in. On the NFT side of things, are you seeing any other novel uses of NFTs besides, JPEGs and 3D animations? Are you seeing projects that are actually starting to utilizing functionality beyond that in the NFT world?
Yeah, I mean, games certainly there's a lot to do there. The area I'm most interested in for NFTs is helping the long tail of creators sustain themselves.
Yep.
So like, Beeple selling something for $60 million or Rack selling something for $10 million is not interesting. Like helping people who are already celebrities make more money is like not of interest to me.
Right.
What is of interest to me is helping a person who has $100,000 on TikTok figure out a way to make $100,000 a year. That to me is interesting. And if you can do that at scale, that's like a really big opportunity. We're kind of on the cusp of those experiments just starting to they're not really being run just yet, but you're about to see a ton of those experiments get run over the next 12, 24 months.
That's cool. I think that's a great market to be looking at. So I appreciate your time and I really appreciate your insights. And how do people reach you?
Yeah, just follow me on Twitter. My Twitter name is at Kyle Samani. My DMs are open. You can DM me there or at me or whatever. Alternatively, you can go to Multicoin's website. And if you want to follow our newsletter, there's an email subscription thing in the upper right-hand corner of our website.
Awesome. Kyle, thank you so much for your time today. This will probably be out next week sometime. I'll ping you with it, but I appreciate it.
Hey, Brad, thanks for having me on the show. It was a pleasure.
Take care, man. People will say that Kyle Samani is biased because of his bags, because of his investments of Solana. But I actually think he has genuine reasoning behind his point of view. You don't invest the kind of money that he invests in projects without believing the thesis he has behind it. And I definitely believe that he has honorable reasons for saying what he's saying. Yes, he is biased because he has an investment, but he has his investment, I believe, because of the thesis he has about Ethereum. Do I agree with this thesis completely? No, but I do not doubt his sincerity. I hope you enjoyed what you learned today. If you did, please rate, review, subscribe, and share it on Twitter. We're trying to spread financial freedom, and we need your help to do that. Have a great day, and thanks for listening.